Gen Z is facing the worst unemployment rate in decades.
I'm hiring. Who wants a job?
Oh, sweet. I just graduated. Let me find my resume.
Oh, sorry, our position's closed. As you can see, we've received a lot of applications.
What? 2025 has been one of the toughest job markets out there, and the unemployment rate for new grads is actually horrendous.
I've been in recruiting for coming up to a decade in July, and I've literally never seen candidates struggle as much as they are right now on the job market.
It's not you, it's the job market.
Hey guys, Breezy CPA here, your certified public accountant, back with another video. In this video, we're going to be talking about this article that relates to jobs out of college, particularly when it comes to the Big Four. Here they say getting a job at PricewaterhouseCoopers out of college will be a lot tougher. It plans to recruit a third fewer grads by 2028. And this seems to be a common trend within the accounting industry, especially with the Big Four, where they are migrating to the use of AI and outsourcing jobs to other countries where they have to pay their employees less money. So this is going to be something that is going to be affecting a lot of new college grads in the coming years. Taking a look here, PricewaterhouseCoopers plans to cut college graduate hiring over the next 3 years. The firm said that its rapid pace of technological change is reshaping how we work, aka AI. Reducing entry-level hiring is a trend across the professional service industry, an industry expert said. So this is something that we are seeing across many different industries. The Big Four told Business Insider it was decreasing our campus hiring goals after we obtained part of an internal presentation saying it plans to cut entry-level hiring in the US by almost a third over the next 3 years. The company did not comment on specific numbers, but said the reductions reflect the rapid pace of technological change and how it is reshaping how we work and historically low attrition. Here we see that a source at PricewaterhouseCoopers said that the presentation was shared with an employee alum group on Tuesday. The person at Business Insider asked to remain anonymous. The presentation slide included a line graph outlining the firm's annual hiring goals for associates. The most junior full-time roles at PricewaterhouseCoopers, which were usually recruited straight out of college until mid-2028 across its assurance and tax divisions, 2 of its 3 core business lines. So these are the core business lines of PricewaterhouseCoopers, where they are saying they are going to be reducing the number of college grads that they are going to be recruiting. In its latest financial year, ending June 25th, PricewaterhouseCoopers hired 3,242 tax and assurance associates, an increase of 92 compared to the previous year. The firm expects to hire 2,197 assurance associates in the 2028 financial year, which is a 32% decrease from the 2025 financial year. So a significant decrease here in the number of recruits that they are going to be taking out of college. The graph also shows that in audit, PricewaterhouseCoopers plans to welcome 661 fewer entry-level hires in its 2028 financial year, a 39% decrease compared to this year when it hired 1,676 audit associates. So in tax, we're seeing PricewaterhouseCoopers with a 32% decrease expected by 2028, and in audit we're seeing a 39% decrease compared to 2025 going into 2026, 27, and 28 here. So a significant decrease here in the number of college graduates that they are going to be recruiting for these positions. And again, this is attributed to AI as well as outsourcing, taking over a lot of these entry-level positions within these accounting firms. PricewaterhouseCoopers told Business Insider in a statement, "We recognize that the rapid pace of technological change is reshaping how we work. with what our clients require and the skills our people need to thrive. So this is just their own lingo here to say they are outsourcing and using AI. Given the historically low levels of attrition our business has faced in the past few years, we are being prudent by decreasing our campus hiring goals in certain parts of our firm and leaving space for us to reevaluate our needs as necessary to meet the evolving demands of our business and our clients. So they're talking their own gibberish here. A bullet point on the internal presentation says that the leadership decision to slow down associate level hiring related to transformation efforts, the impact of AI, and the further AC integration. So the AC integration refers to PricewaterhouseCoopers acceleration centers, more commonly known as offshoring hubs. So they're saying directly here within their presentation that this is a result of the impact of AI and the fact that they are going to be moving to these outshoring hubs, which the firm has in countries including India, the Philippines, Argentina, where labor costs are lower. So they're doing everything they can here to um, lower their expenses when it comes to paying these employees within the US by integrating these AI systems as well as offshoring these jobs. Business insiders at PricewaterhouseCoopers source said there has been a continued shift to have ACs taking more of the associates' work, leading to less need for people in the US core teams. They directly said it here. You know, we're going to be offshoring these jobs because we can pay them less and lower labor costs compared to the US. So these US core teams are going to be cut, and the college graduates out of the US are going to be fewer and fewer. The company declined to comment on the reasoning for the hiring reduction beyond this statement. So, you know, they're kind of hiding away from this. They don't want to comment any further. They just release these short little um, quotes and statements, and they leave it at that. Um, they don't want to expand on why they're doing this, but it's pretty clear that they want AI and these offshore teams to take over. A broader trend across the big four. So this isn't only going to be applying to the big four. We are going to be seeing this across the entire accounting industry with the other big four accounting firms. PricewaterhouseCoopers' projection for entry-level hiring aligns with a trend seen across the professional service firms. Um, Firms are seeking to restructure their pyramids and have AI tools conduct more of the basic functions that would be the domain of analysts and junior consultants. Adding that the changes are coming out very rapidly. And we're seeing this across all industries. AI is taking over a lot of these entry level roles, especially for junior accountants, junior consultants within these companies, things like data entry and processing of information can now be done easily by these AI systems. So there is no longer the need for these entry level roles within the company. And whatever supervision of these AI systems needs to take place, they are offshoring those jobs to other countries where they have lower labor costs. As compared to the US. At the same time, they're turning their talent focus to more experienced data scientists and AI specialists to bolster those capabilities. So, going into the future, if you're within the accounting industry, you really want to focus on specializing on your AI and making sure that you can utilize not only your accounting knowledge, but how to apply that to the current AI environment and systems in order to make yourself more valuable within the accounting space. AI is changing entry level jobs. It's said here AI is having more of an impact on jobs than offshoring. So they're saying here that AI is taking over more of these jobs than they are moving them over to offshoring. Labor costs is the key here. Offshoring was cheaper, but AI dramatically changes the labor equation for many knowledge functions. So they're straight up telling us here that AI is going to be taking over these jobs, not necessarily that all of these jobs are going to be offshored. Some of these jobs are just going to be completely eliminated. In a recent interview, PricewaterhouseCooper AI assurance leader said that she expects the new hires to be performing the roles that managers do within the next 3 years. So we took a look at this article in one of my previous videos where they were saying that the new hires are now practically going to be managers right on their first day of work, because they will no longer be doing those tedious junior entry level position tasks such as data entry, reviewing information, inputting information into the system. Now they are going to be basically supervising these AI systems and doing what managers used to do in the past, where they were reviewing the junior accountant's work and work papers and things like that. And now these AI systems are doing that. So now you need people to review the AI's work. And so basically that means that these junior accountants and these entry level positions are now going to be doing what the managers were doing previously. AI is functioning at more of the staff and routine task level. That's what we're building for. The change will free junior employees to focus on more advanced and value added work. AI is also pushing the Big Four to rethink their business models and redirect service lines toward a more industry focused offering to compete with the nimble tech heavy startups. In May, PricewaterhouseCoopers said that it was cutting 1,500 jobs from its U.S. division. We covered this in one of my previous videos where PricewaterhouseCooper cut 1,500 jobs, citing historically low levels of attrition over consecutive years, and the cuts affected its audit and tax businesses. So this 1,500 job cut here of 1,500 jobs is a predecessor to what they are saying is going to be happening in 2028. Moving into 2028 here, we're going to be seeing even more jobs being cut as AI advances and this offshoring push gets stronger and stronger. In June, the firm announced a major restructuring of its advisory arm, expanding from 4 to 8 platforms. Ernst & Young, another Big Four firm, has also been overhauling its structure and refocusing its capabilities, and we're seeing this across the Big Four: Ernst & Young, Deloitte, KPMG, and PricewaterhouseCooper. They are all following this same strategy here. So it's going to be interesting to see what happens in the coming years, but it looks like for the time being, these jobs for graduates coming out of college are going to be fewer and fewer when it comes to the US, and these jobs are going to be moved offshore, as well as being taken over by artificial intelligence in the coming years. So this is something that you should be aware of if you are planning on entering the accounting industry, majoring in accounting. You should really be aware that you should focus on the AI area in order to make yourself more valuable within the profession, because it's almost going to be expected that need to know how to utilize these AI systems, and it's going to be to your advantage to be proficient when it comes to artificial intelligence and utilizing not only your accounting knowledge but your AI knowledge, and combining the two together in order to make yourself valuable within the accounting industry in the future years. Let me know what you guys think about this article. Thank you to all the new subscribers. If you haven't subscribed already, make sure to hit that subscribe button, and I will see you guys in the next one.